it breaks out of the most highest point that we do have, then I automatically know where the next zone of reaction can potentially be. So this is what helps with this strategy that we use, because then it gives us possible zones and areas of reaction, because then we're using equal distribution of highs and lows, right? So it gives us an idea of where the next potential zone of reaction could potentially be, which in this case would be around that level. So that would be 39,180. So that's pretty much around where the market can reject in the future. So then, because then we've gotten these levels, so then I drop down to the weekly time frame to make sure that all the zones that I drew actually do make sense. And if I do go to the weekly time frame, I can see, even as I go to the previous market, that the market actually does reject around these levels. So you see that same level that the market rejected on there is the same level, and the same level there becomes the same level even there. And even in the past, if you do look at the past, you're able to see signs of rejection. You can see that neckline was also printed over there, and the market has been rejecting even on that particular zone over there, and you can also see that rejection there. So this is like a very valid line, right? So then after this, I try to find a median, right? A median of these levels. So I find like a zone that's in between, because then in this case, we do believe that equal distribution is like, in place in this particular case. So we now do what? We now come and we look for median zones. So that would be 50% through both these lines. So what I'm going to do then, for the sake of this particular lesson, I'm going to switch off everything on this particular tool. So the reason why I'm using this tool is because I'm trying to find half of the distance over here. You can try and calculate that, maybe say 3265.70 plus 348 12.60, and then divide that by 2. You'll be able to get the median, which would be 33,720, 33,719, somewhere around there. So that's what you would obviously be able to now identify in this particular case. But because of this lesson, I'm going to switch off everything. I'm going to switch off this level and that level, switch off that level, and then I'm going to have a tool that's going to give me that 50%. So as you can see, so we've got the 0% and the 100, so that's like 100% of these two lines. And then in the middle of that zone, that's where I'm going to draw my weekly level, right? So that's where we have our weekly level, and exactly on the 50%, you can be able to then see that's where we had our our range there that happened for a couple of weeks. So the range that we did have was seemingly above that level. So now, because now there's a lot of lines, I want to be able to distinguish my lines and be able to identify the lines I draw on the monthly. So what I'll then do is that I'll come and make these monthly levels, give them like some kind of like a box region, like a box tool, so that I'm able to now identify that these lines with the strips are from the monthly. So that's why then now every single time you look at my charts, you'll be seeing something like this. So then all the lines that I draw on the monthly, I'll just put strips on them, just so I'm able to identify and distinguish the difference between the monthly and the weekly zones that I did draw. And now these become my major key levels. Okay, so these zones that I'm drawing right now become my major key levels. So these are the levels that come from the monthly time frame. So whenever the market approaches these monthly lines with zones, I know like automatically that the market is approaching a really strong level and zone. So then I need to be careful, on what really happens on these zones. So again, we've identified this zone. So I can just drag this tool to the next, monthly region, drag that tool, obviously, draw from line to line. And now I want to identify the weekly zone, which in this case would obviously be here. And as you guys can see, this is very accurate. That's where the weekly, zone obviously rejected over there. So that weekly buy came exactly on that weekly zone. So that buy came exactly on the weekly zone. And then again, I can drag this to this zone again, and then this is exactly what we do have in this market. So now if I go to the past, I will be able to identify that this zone is now like a really important zone. So that double top formed exactly on the weekly. And then over here as well, we can now be able to see even here. I mean, even all this disturbance that happens there happened exactly on the weekly zone. So these zones are pretty much accurate, right? So you don't really have to work much. You just need to identify one range and one zone, and then from there you're able to now identify every other thing that you need in the market. So even over here you can now be able to see like these zones are pretty accurate, right? So this is like exactly what I do have on the chart. So US30, this is how my charts will be looking like on US30, and this is even before I analyze. So these are just like levels and zones, right? So everyone can draw these levels, everyone can draw these zones, but after identifying these zones and these levels, you now need to be able to then utilize these zones and these levels in the right way, which in this instance you want to be looking at the trend. There's people that would obviously have this trend line from there, from that previous low. So if you draw trend lines, you draw them from point A, point B, and whatever. So if you draw your lines, let me just make this line a bit thicker so you guys are able to see that. So you can see I've got like templates and whatever. So I'm just going to use hourly breaks because I need this line to be a bit thicker, right? So if you look at this analogy and this ideology, you're able to identify that we've had our first point over there. So we've had our first point over there, and if we can just copy and paste that to the next point that we did identify, so this would be our second point, right? So you need 2 points to be able to then identify zones, right? So we do have our first and second point, and then from there we need what our third bounce, which is now in confluence. So when we speak about confluence, guys, we speak about like such formations when the market will be hitting the trend line like that. This is the third touch we do have, and then again the third touch is in confluence with the zone. So if you look at this formation over here, this was a golden setup, right? Why am I saying this? The same zone that we do have over here now seemingly becomes our trend line as well. I personally don't use trend lines because then I would have known that this is a zone of rejection. So over here we do have the market touching that level. From that level, then we're seeing the market go up. Now, I'm going to go to other tools that I do personally use. I mean, I still do have tools like these. I'm going to show you just a bit, just so you guys can see. I do have these weird lines in my charts to help me understand where the market is going. But I mean, even over here, you could see how the market was rejecting above those moving averages. But for now, we're not there. For now, we're still looking at, the things that we did understand and identify in this market. So, you do have this weekly trend line, and obviously right now we do have the third bounce over there. So this formation that happened over there was essentially the third bounce that was obviously long awaited if you were using trend lines. But if you were using zones, you would have obviously caught this move. But again, there's also another interesting formation that happens over here, right? So you do have what we call an inverted head and shoulder pattern. So that's what these patterns are called, right? So you do have, this is a golden setup, guys. If you were trading this move, you would have had you would have had fun trading this move, right? So this is like a golden setup, right? Where we do have that inverted head and shoulder pattern. So you do have an inverted head and shoulder pattern where you've got, the left shoulder, you've got the head, and you've got the right shoulder, right? So this is an inverted head and shoulder that happens on the weekly time frame. So you can imagine now the moves that would come from that. So this is like a pretty huge move, right? So from there, the market printed this left shoulder, went up and came back to print this head, went up, came back to print that right shoulder. And now this right shoulder is printed exactly on, this obviously monthly zone, and again this trend line third bounce. So this is like a really like clean kind of formation and setup that happens in this particular market. So you have an inverse head and shoulder over here, right? And then this is like pure textbook trading. Okay, this is pure textbook trading. You've got the support level, you've got a trend line, you've got an inverted head and shoulder pattern. I mean, this was quite a clean setup and an easy move to catch. Okay, and then again, there's people that trade counter trend line breakouts. Again, if you trade counter trend line breakouts, you can see how that would have completely played out amazingly for you upon the break that happened over there. So you did have that 0.1, 0.2, and then that third bounce came to obviously print out that right shoulder. From there, we did get a breakout, and obviously after every single breakout, the market has to come back to retest that previously broken level, and that's exactly what happened over here. Market range for a couple of weeks. We had 1, 2, 3, 4, 5, 6 weeks of a range, and this particular week is now the 1 week that's breaking out of this level. Okay, so we do have that counter trend break, we do have that trend line bounce, we do have an inverted head and shoulder pattern, we do have a bounce off of a zone. So this is a golden setup. Okay, this is very clean. I mean, if you didn't catch this kind of a move and you were still disputing this move, then I don't know, like I really don't know what you're doing. But that's exactly what happened. Okay, so for the sake of this lesson, I'd like to keep my charts clean. So I'm going to delete everything that's unnecessary for me, because I mean, I like keeping my charts clean. Now that we've actually understood the pattern that we did have over here, we can now introduce other tools that can help us. Okay, so on the Fib tool, you guys saw that I deleted like a couple of settings on my Fibonacci. So I'm going to be bringing them back, right? I'm going to quickly explain the Fib tool. I mean, today I'm just doing like a really simple live. I'm not going to be going too detailed as to what's what works like how and stuff like that. I'm just doing like something really quick. So Fibonacci is essentially a tool that measures pullbacks, right? So suppose you've got like a push to the upside and a pause and then a push to the upside. So Fibonacci measures where this pause could potentially go to, okay? And it gives us targets to where that next high can potentially be. So Fibonacci, basically makes us understand the magnitude of the pullback and actually gives us our direct target as to where the market can go to. Now, this target usually comes with confluence, because this target either becomes at a zone or a previous high, and if that happens, that the target that we do get on the Fib tool is either on a zone or a previous high price, then obviously this helps us to then get more confidence and confluence in what we're doing. Okay, so I'm going to delete these tools. I hope I'm explaining everything properly to you guys, because then I'm in a rush, guys, to finish. Guys, we've only got 67 minutes and we're like halfway through. So this is like 32 minutes 19 seconds. So we're on 32 minutes and 19 seconds. So I'm going to try and explain this right to you guys so that it becomes easy. So with the Fib tool on an uptrending market, you pull it down from the previous swing low to the previous swing high. So you pull it from the previous lowest point to the previous highest point, right? So my Fib tool comes from this previous low to the previous high, and the pullback is measured in what? In 38.2, 50%, or 61.8. Okay, so the 38.2 level, obviously the push that comes from the 38 will be stronger, because that means from the 100 it's going to be a bit more slower. If it goes to the 61, it's going to be a really slow push to the upside, because then that means the pullback was pretty deep and steep, and then we're going to get a push to the upside that is really slow, and it's going to be going to target, but it's going to be slow. Now, our targets are on the negative 27 for one, and then the second target will be on negative 61.8. Okay, so these are the two targets we use. So we use negative 27, negative 61. So if we look at this move from the monthly time frame using our Fib tool, obviously, which I've obviously drawn in this particular market, I put it from the previous low to the previous high, and the pullback came back to the 38.2. Why am I saying 38.2 from the monthly? Because the market came to the 50 but still closed above the 38.2. So that 38.2 level is a pretty strong level and zone, and you can't ignore that. So because that's 38.2, the move that's going to come is going to be strong, because then that means the pullback that came wasn't that steep, and the market literally took about 38.2% of the entire push that went up. Now, because this is a 38.2% pullback, this means the sellers tried to pull back the market to whatever zone, but they failed to go below that 38.2. I mean, look at the wick that actually came up on that level. I don't know if this is liquidity or what from the new traders that started trading in 2022, but from my old school kind of trading, this is basically like a huge spike, which essentially means the market, the sellers tried to push the market to the level, but obviously the buyers were much more, stronger than the sellers. And obviously you can see how this candlestick closed bullish above the 38.2 level. So from that level, we're obviously expecting what? To see negative 27. Sorry about that. So negative 27 becomes the first target, right? So negative 27, guys, if you look at negative 27, right? So I'm going to put this cursor over there. The negative 27 level is exactly on the previous high, which then gives us more confidence and confluence to know that US30 has much more, much more potential to go to negative 27. And then from negative 27, we're looking at a negative 61.8. And if you look at the pip difference between that 61.8 and the weekly zone we do have, that's not much of a difference. If you look at the negative 27 and the monthly, that's not much of a difference, which means that the market can still spike on that level before it pulls back. It can still spike on that level before it drops. So now Fibonacci is also confirming to us that we're actually going to see a huge push to the upside. So I don't know what fundamentals are going to come out, but looking at this particular technical analysis, I do anticipate a really good outcome in the US30 markets, right? So we're going to see a really big push to the upside, right? So if this weekly candlestick closes like this, next week's candle can come and touch that zone, and from that zone we can now see the market pushing more to the highs. So that's essentially what we do have over here, right? So then we have gotten our analysis from the Fibonacci, we have gotten our analysis from market structure. Now we're going back down to the weekly. So on the weekly, we did identify that as well. I mean, you can still do this particular move that we did have from the previous swing low to the previous swing high, and then you drag it to the right. If you look at this, we do have a 50%, so it's within the 38 and the 50 level, and you can see now it went straight to target. So the rejection that happened over here, it went straight to target. So from that target, we're looking at negative 61 for second target. So you can now see that there's more buying momentum in this particular market than there is for sellers, right? So Fibonacci is essentially my one favorite tool that I do use. Now that we're done with this analysis, now what we do now have to spot and identify is that we need to find entries, right? So I do go down to the daily time frame. So on the daily time frame, guys, right? So basically from my analysis, I do need the market to reverse exactly on these levels. If the market reverses anywhere in between, then I need to obviously identify and mark out that level, because then this becomes an important zone and level within the markets. So I mean, look at this beautiful formation that happened over there. I wish I caught this move. I mean, I can't even remember if I caught this move or what, but this is exactly what we do have. This was somehow a previous zone. The market broke out of that level, retested, went up again. Obviously, the market, came back to gain more momentum and more strength. If you see stuff like this happening on a buying market, you must know that this zone, is going to be tested, and the push that's going to come on there is going to be strong, because then the market is basically telling me that we want to buy, but we don't have enough strength to buy. But we're going to keep on coming back to this important zone that you did mark out, just so we can pick up more momentum, so that if we push out of this zone, this can be a really big and a huge push out of this zone, which in this case and in this instance, we can see clearly. The market came back to this zone. From that zone, you can see why then this big push happened, because the market came back to pick up momentum and strength and volume to now push out of this level, right? So it's a really quick analysis that I'm trying to give to you, right? So again, on the daily time frame, what I'm trying to do is that I'm trying to identify zones and levels where the market is rejecting, and obviously mark out those zones and levels. And I don't want to go to the past. I want to go to the actual market that's currently being printed to me right now. So what I then do on the daily time frame is that I'm going to be marking out these zones. So I'm going to mark out that high, right? So I said I look for a median zone, right? So I'm looking for a median zone. So because this is a daily zone, I'm going to remove the extensions. And then I'm going to go to, so I did tell you guys I've got templates, whatever. So I'm going to use psychological level. So I want to mark out this psychological zone, because this turned exactly at a random place. So we're 40 minutes into it. We're coming, guys. 20 more minutes to go. So we've got a random area over here, right? So we've got a random area over here, which, for some reason the market used as resistance. So we want to understand why the market then uses this zone, because we want to catch our entry points exactly on these zones. So we enter either on these zones or the daily zones that we mark out. So there's no need for me to then go to the past and mark out this zone all the way to the future. I mean, this zone is relevant. If you look at the formation of that zone, if you put that area there and you want to draw this across your chart, let's maybe take up that zone for argument's sake, just so people can really be satisfied satisfied that this zone is irrelevant. I mean, look at that. This zone is irrelevant. The same zone that influenced the market is not the same zone that influences the market over there. What does that mean? That means we have to now modify our zone to current market. So we do see this zone over there. So now, because I've got my zones and everything I need to be able to now enter, everything that's below the daily time frame from the H4 time frame is for me to now scrutinize the market and to basically understand exactly what it is that happens. So look at the masterpiece that happened over there, right? So we've got a beautiful masterpiece. So the same zone that I draw on the daily time frame is the same zone even on the H4 that pushes the market down. It's the same zone that the market was rejecting on over there. Same zone that the market broke and came back to retest. Can you see that retest exactly on that gray area? And from that gray area, you can now see the market pushing up, pull back a bit, push back up. So now, what do we need now? Based on what we did say, this zone hasn't been retested, right? So the sells that are happening here could potentially be a retest to that zone, right? But again, you don't want to be trading these random as, these random ass retests that happen over there, because I mean the market could decide to push up from that level. Again, we've got more momentum going up compared to momentum going down. So in this particular instance, you want to be able to see the market pulling back to this zone for you to be able to buy properly. Remember, this is what I want you to take out of today's live. I want to write this down, guys. I want to write this down. Your duty and your assignment in the market is to buy and to sell, right? So this is your duty and assignment in the market. You want to be buying and you want to be selling. This is your duty in the markets, right? Any other thing that people tell you on Instagram is not even important, right? So when we speak about buying, we're saying the market is obviously going up. So whenever the market is headed up, we want to be buying. So because you want to be buying, you need to understand areas in which you want to buy from. Where do you buy? You buy low, right? So these are areas that you want to be buying from. And where do you sell? You sell high. So what does this then mean, right? What does this then mean? I want to explain this to you properly so that you guys understand it properly, right? So if we're saying we want to buy, we're saying that we want to identify low points where we can buy from. If we want to sell, we want to identify high prices that we want to sell from. And if the market is already high, then buying is impossible. If the market is already low, then selling becomes impossible. So if the market is low, we're looking for buys. If the market is high, we're looking for sells, okay? And in this particular instance, right? So let's look at this move, right? So this is a buy, right? The market is already high up the roof. Can we buy? If we look at this analogy, selling high and we're buying low. So if the market is already high and this market is a buying market, can we then now say we are buying in this market? There is absolutely no ways we're going to be buying in this market because the market is already high. So what must happen right now? The market must come back a bit lower. So the market must pull back to a lower price so that we can be able to buy. Now, the same word low is the same word support. This is something that you need to understand, guys. So the same word low is the same word as support. And the same word high is the same word resistance. So when we're saying you want to be buying high, you want to be buying low, we're practically or indirectly telling you that you want to be buying at support, okay? That's what we're indirectly telling you. And when we're saying you want to be selling, we're indirectly saying to you, you want to be selling at resistance. If we're saying you are selling high, we are indirectly telling you to look for resistance points where the market will be coming back to, and you want to be observing and understanding your selling prices, because then the market will be giving you entry points around these high and low prices, which essentially are support and resistance levels. So then it's important to identify these resistance levels. I mean, even here, this was resistance that was broken, and we do know, all of us that are in here on this live, that a previous broken resistance level becomes a new support level. And if a new support level gets broken, it becomes a new resistance level, right? So now the market broke past resistance and it's already up the roof, it's already high. So we can't be buying over here, guys. I know the market is buying, but like right now, you can't be buying given the fact that the market is now pulling back. So what do we then need in this particular market? We need a retest on this zone, right? So we need a definite retest on this zone, right? So then you need to wait for the market to then come back and give you a slightly lower price. Again, this is the H4 time frame, okay? But when we drop down to the hourly, this is where the magic is right now, okay? So this is where the magic is right now. This is exactly where the magic is. So when we look at the hourly, now we're able to now understand what we call sessions. So guys, I don't want to go too deep on this, right? But like, allow for me to go deep for the sake of this lesson, okay? So now there's different sessions. So if you see this happening on the hourly, right? So this happened exactly at what? At 3. So this was like the New York session, pushing the market up, but this was like a previous session high. So that was like a previous session high that was printed over there, which was obviously printed at 4. So this was like the move that came from yesterday's move. So at 3 the market pushed up. Today at 3 the market pushed up. Why is it pushing up? Because the market keeps on pulling back to find a slightly lower price and then pushes up. Right now it started pulling back. So look at what happened yesterday, right? So at 4 the market started pulling back. Until when? So this was 1 in the morning, and at 1 in the morning the market decided to print out that low price. From that low price the market now started going up, so it started pushing up and it came back again. If you look at this formation over here, I mean, some people can say that's an inverse head and shoulder, but like in this particular formation, the market then printed as a previous session low. From that previous session low, the market kept on pushing up, came back to grab liquidity at the bottom, and at 3, it immediately pushed up. So now from there, we had our New York high price that was printed just like yesterday's move, basically. Right now, the market is pulling back. So there's no need to be buying right now, because then right now is what? Right now is 1. Remember what happened here? The market printed a low at 1. So it's very possible that even right now, the market is printing out a low for this particular session. And if you buy over here, then you obviously know that your stop loss is below that low, because then it's already too high to buy. Personally speaking, I wouldn't buy over there, because I mean the market is already too high to buy. Now, trendline traders seek to find trend lines like these, where they'll maybe want to be able to spot and identify these kind of formations when the market comes back to maybe retest that particular level, which is also like a possibility, because remember that a previously broken zone has to be retested. Okay, so we do have that previous session high, which can still be potentially retested as the new high of the day. So this is like what we do on a day-to-day basis. But I would personally love to see the market coming back to this zone before we can start buying. That can still happen this week or next week. We don't know, given the fact that today's Friday. But obviously, because today's Friday, the market can still come back to this zone and push up again, and then maybe see that major drop to the downside, and then grab buy our buys from there before we essentially push up to the highs. So that's exactly what you want to be aware of. So you want to keep your mind open, right? So if you maybe copy and paste that pattern over there, maybe you do have like some sort of like a channel that's forming. Maybe you do have something like that. For people that trade channels, you probably do have that on your charts right now, right? And you can be able to then see that we do need like a slightly deeper pullback before we can essentially start buying entirely. So that's also another thing that you want to be focusing on. That's another thing you want to bear in mind. That's another thing you want to focus on, and obviously note and identify as you are looking at this particular market. But in this instance, we do know that we need a slightly deeper pullback on US 30. Now, if you go to the M30, guys, right? So I'm personally a structure trader, okay? So I'm a structure trader, and if you look at market structure right now, you're able to see that the market in this particular instance, structure is not too clear on this particular market, but for the sake of this lesson, I'm going to pull out this previous high, because I mean that's like a really important high, hey? So we can't ignore that. So that's a really important high, and right now the market is currently trading below that high price, which obviously means that we can see the market pulling back from that particular high to the downside, at least to come and grab liquidity around here before we see our general buys to the upside. So that's essentially what we're looking at. So anything that happens on our lower time frame is you confirming the candlestick formation and patterns that happen over there. And when you look at the M15 time frame, this is still like a very big time frame for US 30, right? So we've got a high, we've got a low, we've got a lower high, we've got a lower low, we've got a lower high, we've got an equivalent low. Now the market is seemingly printing a lower high from that level. From there, we can see the market pushing down to that particular level. So I do see this kind of a formation being a possibility, the market pushing down to this zone and essentially breaking out of that level, retesting, and obviously eventually going up. So this is what I'm personally looking for. So anything M5, you're looking at candlestick formations, you're not analyzing on the M5. Imagine if you bought right now, you're already now data zelling, because now your entries are now like your entries are like I don't understand. You understand? Now, if you look at this formation, this is where now me and my friends who are on this live will be saying to you, there's like a head and shoulder that's forming on M1. Where are we seeing that? We're seeing this because we can see the double top is the head, there's the right shoulder, and this is another shoulder over there. And look at how this thing is dropping. So you would have been able to catch this entry exactly where on that particular line. So, I mean, you're floating a couple of points now, you're floating a couple of points now. If you cut that sell entry over there, you're floating a couple of points now. And if you go back to the M5, you can see now the M5 is completely bearish now. If you look at at this reversal that happened over there, you can now see we've had this engulfing candlestick. It's not even an engulfing candlestick, but this is what I would personally call a bearish variation pattern. So bearish variation patterns are when the market forms these kind of formations, and obviously it confirms to us that the market is obviously going to be going to the downside. And obviously we have about 2 minutes before this M5 candlestick closes, and if this M5 candlestick closes like this, then obviously the market will be going down. So this is where you would want to enter. Obviously your target would be on that gray area, and from that gray area you wait for these kind of formations for you to start buying, and after buying from here, you obviously wait for the market to now go to the upside. My brother has spoken. He is saying I must close it. What are you guys saying? He's saying I must close it. What are you guys saying? What are you guys saying? I think I've covered everything that needs to be covered. So that's essentially what we look for when we do trade. So do take a screenshot right now on the 500 views, tag me on your story, and I will repost. It's gonna feel nice, guys. You're gonna get reposted by a verified account. Jokes, but that's essentially what I look for. That's essentially how I do trade. So I gave you guys my full course in 51 minutes. I thought that I was gonna drag it to 67 minutes, but it's 51 minutes, and I covered everything that I needed to cover. So let me accept my brother so he can also add a thing or two. Basically what you do, you have to take a screenshot, tag me on your story, and then I will be able to then repost your mentions that charge you for courses that understand, that give you useless value, that give you things that won't work. If you get the skill right, and if you understand how to analyze the markets, how to plot your levels, how to find your entries, this is the most biggest thing that you can ever do for yourself. This thing is very, 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 very possible. Bear
in mind that people haven't really learned about entries and exit points. This was just top-down analysis from monthly, weekly, daily, 4 hours, M15, M5, M1.
All the time frames, my boss. All the time frames.
I always
say that if the time frame is there, the time frame is important. They wouldn't put the M1.
If anyone blows tomorrow, it's on them, dog. If anyone blows tomorrow, it's on them. They already have a direction for the rest of the day tomorrow, direction for the rest of the week next week. Theirs is now to find an end, dog. It's too much.
This analysis is too clean, boy. This was the one. This analysis is dangerous. So, guys, I hope you did learn something. Drop a comment. Tell me what you did learn. Tell me the questions that you do have. I've got Dumelos, Tola, I've got Stylish Kids in the building. These are big guys in the industry, and we're on how many minutes now? We're on 50. Wait, how many minutes is this thing? 51 minutes 40 seconds. So we've got about 10 minutes left. So do throw in those questions, throw in those comments, so these gents can also help you guys. What we are trying to do in South Africa is bigger than what has ever been done in the country. I swear. What we are trying to do right now is really
coming. Something big is coming.
No, Martin,
maybe by Monday,
like in terms of
Monday you will announce. Maybe by Monday you will announce tomorrow, not today. Maybe by Monday. But something big is coming. It's gonna be a life-changing thing. It's coming. The country hasn't seen nothing, my man.
So you should drop the bomb on Monday.
Let's drop it on Monday. It's still too soon to drop the bomb
on Monday.
No, no problem then.
Something big is coming, Fana. Something big is coming.
How do you delete a comment? So
Sana put the best broker to start trading. That's a part of it. But something big is coming, guys. I don't want to lie to you guys. What Martin just did now is that's a life changer.
Yeah, Ngasikhulumele nje ngasesayitini nje sikhuluma indaba zethu esayitini sibuye ukuthi ngabakhiphelani. Hey.
Yeah.
Sasabonga dokotela.
I know, Peter, you know. But guys, that's just about it. How do you avoid spikes? There's no ways you're gonna avoid spikes, guys. Like everything that I did, like spikes happen exactly on these zones and levels that I did show you guys. So every single thing that we did today is essentially what you need to look out for in the markets. If you do anything different from what I did, like I just don't know, guys, because I gave you guys my skill, I gave you guys my knowledge. I know this is going to be recorded for YouTube, so the guys that missed it can still search Dr. Martin on YouTube and you'll be able to find this live. People record.
We're coming to the rest of South Africa. We're going to hit Mpumalanga. We're coming to Pretoria. We're coming to Bloemfontein. We're coming to Rustenburg. We're coming to Cape Town. The whole country. Someone is saying, stylish, when I learned this in PT, I became way more profitable. This is really life-changing. And that was, 2 years ago. We were not as skilled as we are today. So what Martin gave you is just a glimpse of our strategy, but there's more, guys. There's more. We are coming to Mpumalanga, we are coming to Limpopo, we are coming everywhere, guys. We are coming everywhere. Northwest too, we are coming. Pretoria, we are coming. Joburg, we are coming. You must just be prepared for more, guys. Joe's is included, the whole of SA. We just did Durban not so long ago.